This week, markets grappled with geopolitical tensions, varying equity performance across regions, and important commentary from the Federal Reserve. Markets opened the week cautiously amid continued tensions in the Middle East, leading to a fragile sentiment. Conflicting signals from Washington regarding renewed threats against Iranian energy infrastructure versus a willingness to negotiate contributed to the market's uncertainty. Next, let's look at how equity markets performed across different global regions. U.S. equities were mixed, but European stocks saw outperformance, primarily supported by falling bond yields. Conversely, Asian and Australian markets felt the stronger impact of energy-related uncertainty, bearing the brunt of the cautious opening. Moving on to fixed income, here is the latest on bond markets and insights from the Federal Reserve. Bond markets firmed up following reassurances from Fed Chair Powell that longer-term inflation expectations in the U.S. remain well anchored. Powell's comments prompted a pullback in near-term rate hike pricing, easing some pressure on fixed income assets. The Fed's outlook also renewed discussions about the possibility of a Fed rate cut later in the year, depending on economic data. Finally, we turn our attention to currency performance and the highly active energy sector this week. The U.S. dollar remains supported, which is typical during periods of risk-off conditions where investors seek safety. Energy markets dominated the narrative, driven by the continuing geopolitical concerns in the Middle East. West Texas Intermediate, or WTI crude oil, notably surged above the 100 United States dollars per barrel mark. To wrap up, here are the key takeaways from this week's volatile market activity. Key themes included Middle East tension, mixed global equities, a firmer bond market supported by the Fed's inflation outlook, and a significant rally in WTI crude oil.